welcome back to my channel. I am Andrea, and today I want to give you a brief update on the Chevron's Q3 earnings call, what was my key takeaway, and then I will tell you as a Chevron shareholder if I intend to buy, hold or sell. So let's get started. So my financial highlights was that they had a strong financials, but they had a decline year over year as the oil prices are not stable and they go up and down all the time. Nevertheless, they had 4.5 billion earnings, but the last year was 6.5. Despite this decline, they returned a record amount of cash to shareholders in the form of a dividend. This was 2.9 billion, and they also repurchased record amount of the shares. This was a 4.7 billion. As we see here on this slide, they have a good debt ratio of only 14%, which tends to be a strong balance sheet. What are they also doing? As we can see here we see the cash flow. So they had a 5.6 billion cash flow, and after the capex, dividends and share repurchases, they also issued a new debt with 2.6 billion, and this left them with cash on hand with 4.7 billion in the end of Q3. The next key takeaway for me was that they do portfolio optimization. They want to sell their non-core assets, especially assets in Canada, where they can generate a 6.5 billion additional cash. They are also on the track with their cost reduction plan. They want to reduce their costs, their OPEX, somewhere between 2 and 3 billion by end of 2026. The environmental innovations, they spoke about that they expand their CO2 capture storage in Australia and launched a new engineering and innovation center in India. So for me, as a income-oriented investor, I want to show you this chart here. As I mentioned earlier, they have a strong credit rating, EE- from S&P, and there are not much companies that they have such a strong balance sheet. Here we can see the last 10 years of dividend payments, 2015-2016, as the oil prices was down, they keep the dividend flat, but they managed to reduce their costs and then also increase the dividend. They was also able to increase the dividend during the COVID, where the oil prices went down for the short period of time. In general, they spoke about that they could increase the dividend much more, but they don't want to, because their goal is the stable increase of the dividend where the income investors can rely on. This we also see here, that their payout ratio from the free cash flow is only 63%. So Now we have oil prices somewhere between 65 and 70. If the oil prices drop somewhere in the mid 40s range, the dividend will be still sustainable. And this was my key takeaway. I started my position at Chevron in summer, and I want to increase my stake, but I think due to the macroeconomics factors, or maybe we will have a recession, or there are certainly fears from the recession. I think the oil prices can drop a little bit more, and then will be the good time for me to add more of a Chevron stock to my portfolio. I hope you find this video helpful. If you did, please give me a like and write comment with your feedback. Thank you. Bye.